Today, we will continue our journey. We will combine multi-smart money concepts together and use price action to have trades. Of course, we'll be using our superior trading view indicator also. A great education day. If you are good to go, let's start now. Let's talk about how to build positions based on our strategies and directional bias we have. As you already know, when we spot clear targets like the previous day's high, we always ask ourselves how the price could realistically reach that level. We usually look for cheaper, solid points of interest, especially things like the multiple imbalances. But sometimes that alone isn't enough. And that's why we also pay attention to supportive structures like the demand order blocks. This combination gives us a really strong area to build our trading setups. Our most classic entry model is opening a lower time frame and watching for some kind of structure shift. And honestly, this is probably the most common entry type you already know and we have been using for quite a while. The problem is that this method requires a lot of waiting and being extremely precise and patient with your timing. The alternative method is building a cost average inside your entry zone. For example, let's say we have a large imbalance area with this demand order block sitting right below it. This basically gives us a very wide and flexible entry location. So what you do is place your limit orders throughout that zone in a strategic way so you can build an averaged position. In reality, we have no idea how much the price might chop around or struggle inside that area. It could take a while. But the good part is you don't have to sit and wait for the perfect moment anymore because you're entering slowly and steadily. Let's check out everything in a real time and see how we can actually build these positions. Solana gave us a really clean example recently on the 4-hour time frame. We had the previous day's high sitting above the price as a clear target. And we also had this huge 4-hour imbalance area lining up with a demand order block. So overall, we already knew the direction and the possible entry area. And you can see how simple it looks, right? But if it is really that simple, why is it so hard to trade it? Because waiting for a structure to shift on the lower time frames takes a lot of time and patience. What I like to do is set 3 different limit orders right at the key spots. You can place your first order at the start of the imbalance, then your second order around the EQ of the imbalance, which also lines up with a support and resistance flip area. And finally, your last order can be placed right on the order block area, the demand zone. So what is the real benefit of doing this? The benefit is you are not waiting around for anything to enter anymore. You already placed your orders. But as you can see in this example, not all 3 orders get filled. The last one was a bit too low to trigger. And that's tough reality of trading. Not all your limit orders will get filled, but at least you are not glued to the charts waiting for an entry for hours and hours. Okay, so what is the other way to trade this? Of course, you can drop down to the lower time frames and watch for a structure shift. For example, on this 15-minute chart, you can see the shift in structure, the pullback, and then the rally towards the previous day's high. This is the most classic entry model we have been using for a long time. So, when you compare DCA cost average methods with the classic reward systems, there are a lot of things to keep in mind. The advantage of YOYO is that you almost never miss an entry. With the classic reward system, you can easily miss any setups. With cost average, you are not waiting. Just set your orders and go about your day. But with reward systems, you have to wait for a specific entry. But the big issue with the cost averaging methods is that you usually end up with smaller profits and bigger, sometimes gigantic losses. With classic reward systems, you normally get better profits and smaller losses. And when you use DCA, you will notice something. You will get like 80-90% of win rate because taking quick profits with small profits. With classic reward systems, your win rates will be much lower due to the instant stop losses. Okay friends, I hope that you enjoyed this video. Please take care for now and have an awesome day. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free trading view indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.